So, you know, named L. Jermaine Russell. I'm here, Stocks and Squats or Stock Talk Sundays. And this is where essentially we just go over some of the trades that we did the past week. Last week we didn't meet mainly because it was Father's Day weekend and because of Juneteenth weekend. So I wanted to make sure that I honored not just the dads, but the new federal holiday um, by not having a session last week Sunday. But now that we're here for this week, I think that this week will give us an opportunity to expand on the things that we learned from the previous weeks. We're going to go over some of last week's trades, a couple of economic news that we should probably tap into, especially for Monday and Tuesday, and then start looking at what the earnings preview might look like, even though earnings looks relatively thin. And actually, let's start looking at earnings this coming up week. I know it's not in the exact order, but at least it's there, and you can see, right? You can see that. Whoops, wrong one. You see that when it comes to earnings, there's not a lot of earnings really going on this upcoming week. And the biggest earnings, if anything, that people should probably have on their radar would more than likely be Bed Bath and Beyond, just because it was one of those meme stocks, one of those stocks on Wall Street bets that has been mentioned. And because it's been mentioned before, uh, with it running with AMC and BlackBerry and GameStop, I wouldn't be surprised if something positive happened with their earnings. So Bed Bath and Beyond, that's one that we could definitely go over when we're analyzing these earning stocks. And then there's Micron. Micron is a semiconductor stock. Obviously, that there are some semiconductors are in shortage right now, so it wouldn't be surprising that Micron would find some upside. AMD found upside last week. I forgot if it was earnings or if it was just off of good news. But I would anticipate Micron and the rest of the semiconductor space to find some sympathy off of the move with AMD and Micron if Micron releases something positive. Also, there was Nvidia. Nvidia did something very well last week as well, um, where their stock price went up over $100 in the past maybe week and a half. So, this whole semiconductor space is looking pretty fruitful right now. Other than that, then we have some food industry like Yum China. I think that's dealing with Yum brands, but it's just Yum China. We also have McCormick. McCormick is also a food manufacturer, of course, with seasonings and stuff like that. But Constellation Brands, CTZ, I think they, you know, I know that they're into the weed space now, especially with a lot of their alcoholic drinks and stuff like that. So it makes it, weed infused drinks would probably be a part of the conversation if when they do release their earnings on Wednesday. And one more food related stock is General Mills. General Mills, they have a lot of the cereal brands and stuff of that nature. They come out with earnings also on Wednesday. So Wednesday might seem like the more interesting day than the other days, because Monday looks very nothing, and then Tuesday, not much of anything. Fact sheet, Avid Bioservices, probably the most notable names there, but definitely Bed Bath and Beyond, Micron, Yum China, General Mills, Constellation Brands. Those are highly noticeable names. And as always, I like to harp on this whole Wyckoff events just because this is very, very helpful. Wyckoff method has been a game changer for me, and you're going to see it once again with these plays that I show you from this past week. That when, especially with Blink, BLNK. That was one of the one stock that definitely is following the Wyckoff method. We're going to get to that, but Wyckoff method, as normal, we will always see a stock that goes up, and we're like, man, this stock went up, right? And once it makes a monumental move, maybe like this on a couple of days, or maybe like this on 2 days or one day, it makes a move, right? It makes a move to the upside. And then once it hits this resistance, whatever the resistance is, it starts to consolidate. Once it starts consolidating in a range between a low and a high, low, high, eventually it breaks down, and it breaks down below that support. And once it breaks down, it will, sorry about that, it will consolidate again, right? So it will break down, consolidate, right? Have support, resistance, support, resistance, support, resistance, until it can break resistance and then go up higher, which it did right here, went up high. And then once again, back to resistance, came to support, resistance, support, resistance, support, breakdown support, comes back down to the support, and then trades in this range again. So you will see this quite often, where the Wyckoff method is quintessential, one of the best ideas in identifying what stocks to get into, especially during its early phases, right? During the early times. So with that being said, let's compare some of this Wyckoff stuff with some of the actual stocks that moved during the week. And during the week, we had a couple of stocks. Let's start with space, Virgin Galactic. I was in this earlier, and I ended up getting out. I was buying shares at one point, and I got out right around here. But I ended up buying the options contract on this day, and I didn't hold it all the way through, but I held it just enough just to get enough upside. So when it came to space, when it came to Virgin Galactic, what we do when we're looking at the Wyckoff method, and even why I even thought about entering into this space, entering into this into space.
Hey.
There. Hey, Angie. We're on the line with two other people here. And I'm good. How are you?
I'm good. Good to see you guys on this Sunday.
Facts. Well, I can't see you. Hey, where are you? I don't see you. But it's good to hear your voice though. It's nice and energetic as always. I love it. I do appreciate it. But we're looking at space right now because space did that nice move on Friday. And I know I was mentioning space earlier in the week. I was mentioning it actually I think like 2 weeks ago. Let me actually pull up my notes, and I'll show you my notes because I feel that note taking is probably one of the better things that you can do for yourself when it comes to investing in the market, understanding what's around. If you have some notes, then it makes everything so much easier, so that you can go back and kind of just analyze what did you do. So I'm looking for my notes on that Snap. Snap is what I'm holding now. Snapchat. But for space, as you can see, like I tend to write, right? So with space right here, still brought me all the way down. And there you are. So I was talking about space at the very beginning of the month, right? And it was really because there was a contract to fly, and it was with the researchers from the International Institute of Astronautical Science. So that in itself, that right there, like, that they were looking for a new contract to fly, um, was leading me to believe that this was going to have some type of upside. And I was buying some shares when it was at $32.44. I ended up selling it when it was at $36.30. So as we saw in the actual chart itself, um, we saw that as I bring up the chart on June 3rd, and today is June 27th. On June 3rd, which was right around here, right? It was finding this upside. So I was seeing all of this as phase one, even though this was phase four from the Wyckoff method, right? I was seeing this as, yeah, this looks like a phase two because it's all going up, and then this continues phase two. But on June 3rd, I was still seeing this as kind of like phase one, mainly because when I look at the moving averages, right? I have the 5 EMA and the 20 SMA. Only the 5 EMA was over the 200 SMA at the time, and it was slightly near overbought. It wasn't all the way there, but this sideways kind of action was all phase one. It was all phase one because it was going sideways and it was incrementally going up higher. And because it was incrementally going up higher, even though it wasn't an exponential move, it was still a move in itself, which continued phase one before actually going into phase two. Right. And now we see here at phase two, before this move here, that the 20 SMA price was above the 200 SMA price. So this green line and the teal line was above this red line, right? And that's why these moving averages are always so important. And I harp on them like all the time. Because once you have these moving averages above, it's easier to identify if a stock is going to go up higher. So yep, phase one. I know it looks more like it could be a phase two, but it was really more of a phase one, just because both moving averages wasn't above the 200 SMA price, and it wasn't all the way overbought. It was slightly overbought, but it wasn't like crazy overbought. It was, it went overbought and then would come down and then just kind of trade sideways, um, near the overbought. I wasn't sure if it was going to pull back or not, but the next clue was that it closed. This was on Thursday, this candlestick right here, that it closed above the 5 EMA on Thursday, right? So each day has been closing above the 5 EMA price. This was probably the only day that it didn't, where it closed slightly below. But even though it did that, it still kind of held support, right? It kind of held the support the previous green day, previous red day, green day. It was all near this like supported price. So that 34.80-ish price was held. The integrity of that price was held. So the only thing this stock had to do was just trade above the 5 EMA, which it did, traded and closed, and then we got a higher candlestick here. So this is space. This is how space is. Now that it's overbought, I would not be in the running to buy any right now if you weren't in it already. Like I said, when you write any type of notes, you should really try to be as clear and detailed so that when you do come back to it, you can understand what you did and how you did it. I tend to highlight or bold where I bought and where I sold. So the last time I ended up buying this, shoot, I didn't bold here. The last time I ended up buying this, and there we go, I sold it here too. This one I sold for a little loss last time I got in. right? It started to pull back, and I was like, nope, and it pulled back to my downside risk. So if you see my notes and you're reading it, this is what I typically do. Like I'll mention the downside risk, I'll mention the upside reward, I mentioned like where I bought it, the time, right? The date. The time is usually a good idea to write down, just because if you're buying at the same time, like if you continually buy at 2:30 and then you see all of your trades are relatively good at 2:30, then it gives you some insight that 2:30 is a good time for you. Or if you end up buying like around 12:30 or at 11:30 or something like that, and you realize that's consistently not a good time to buy for you, then you should probably take that as a note. So that's what I try to encourage people to do, right? Is that you write down where, the time, and the price, right? So the last time I ended up buying this contract, which I sold way too soon, I bought the $70 calls on Space, and I bought it on my Robinhood account, right? So I ended up buying the $70 calls at $1.70. I sold it at 220. If you know that was relatively a low price that I sold it at, and mainly the reason why I will go to the intraday. Um, when I was looking at Space and I was looking just to sell it on the intraday, it already made a new high. And my biggest rule is when it makes a new high, I was selling it right around here. Let's pull out the actual contract so you can see the $70 call too. Another reason why I bought the $70 call is because look at the volume. The volume is at 18,000. The open interest is at 2,000. So this was telling me that it had some chance to go up higher. And mind you, I sold it when it was 220. You see the bid and the ask now is at $4.15. That wasn't the high. It definitely went higher, and it's still after hours on Friday, it still went higher. So let's pull up the chart on Space. Let me see. Yes, you can see that. Now the only thing it's not showing me is where I bought and sold. Give me 1 second. You should, nope, that's there. Nope, okay, see, this is the hard part where I try to figure out, like, where the arrows, and it's not showing the arrows, but I bought right around here. This is why I wrote down the time, 10:04, right? So I bought the actual options contract right here. And then it just rode on up. And at the time, as you can see, if you look at the RSI, it's all overbought, right? I don't know when it's coming down, but I just know that it was making higher highs. Anytime a stock makes a higher high, like it made a high here and then pulled back and then came up higher, and that's a tough sell right there. Even right here, it was making a higher high and then pulled back. Same thing here, it broke the previous high, which was right there. It's kind of pulled back before going higher. The whole time it was trading above the 5 EMA price intraday. I wish it showed the arrows on where I bought and sold, but I sold it at 220 after buying at 10:07. So let's look again. 10:07. I didn't hold it too long. It was like I said, it was right around here. 10:07. And I had to have sold like right around here. Like literally for 20 minutes at most, I was holding this. Once it broke this high, I was looking to get out. I didn't know it was going to go up higher. But I did know that they had good news on the FAA giving them clearance to pretty much do commercial flights in outer space. So, you know, that was a good enough catalyst to move this higher. So so the good note about this is that when a stock is trading above the 5 EMA price, anytime it's trading above the 5 EMA price and it's overbought and it's made, you know, continues to make a new high and it has good news, maybe you can wait until, you know, midday, but it made its highest high of the day at 11:16. That's when it came down from $6.49, right? So if I held it from $1.70 all the way up to $6.49, I would have made another $400 or $500 per contract. So, but you know, there's nothing wrong with taking 20% return. I took my 20% and then I got out. So, you know, always, you know, try to think in terms of percentages. If you're making 20% on a trade, that's really good. Not a lot of stocks trade 20% in a day. So if you earn 20% in a day, that means you're doing something really well. And you can keep that up. So this is space. And as you can tell, after hours, it went up higher. It went up to 59. But once it made that dip, you'll be reminded that anytime a stock, especially in the pre-market hours, when they have news that come out in the pre-market and they're making a high during the pre-market, when the market opens, expect a pullback, expect something like it already went overbought a couple of times. So expect it made a new high, expect a pullback. And that's what it did. It pulled back. So after 10, that's the only reason why I bought it at 10:07. I was looking at it right here when it was making these crosses, when it was making the cross on the moving averages and making a cross on the MACD. Once I was seeing these crosses, I was looking at everything to buy and hopefully not to buy too much. I was looking at everything to buy. And I just rode the wave on up. I think I sold like right around here. You know, when I was starting to see this little dip here and it was overbought, so let me get out. So if I bought the shares, you know, from 47 to 53, that's $6 a share. Bought the contracts. You know, I didn't get the whole move, but I did get enough. I did get enough for the move. And that's all you need. You just want the meat of the move. And that's the meat. That's the meat of the move. So does anybody have any questions about space? Angie, you might have a question over there, I would imagine. Or Grace or Donna. If you have any questions, please feel free to ask. Like these stocks are not too hard to trade. It's really, really easy, especially if you have patience. And you know, there's quite a, you know, people tend to say like, oh, there's so many stocks, how do you narrow it down? And it's hard to narrow it down, but there's a couple of indicators that I tend to use to help me with that, to help me like narrow it in. And let's do this with Snap. So with Snap, this is one that I bought before and I sold, and then I bought again this week. I bought some contracts in it. And this one, like I said, let me actually show you the notes. I bought it on my E-Trade account. And once again, it was just moving the way that I expected to move. Let me see. I didn't highlight it on here as I thought. Where I sold some of these contracts. There we go. Let's highlight you. And yes, I rebought the same contract. So I bought the $70 calls as well on Snapchat. And Snapchat, like I showed before, you always want to look at the phase. Like, what phase are you on, right? When we identify what phase we're on, then it's easier to get some type of idea of where it could possibly go. So we see that it made a new high, right, on back in February for $73.59. Then it pulled back, right? It pulled back, came down, pulled back, came up, pulled back, came up, right? So it was doing every time it pulled up, it always hit this resistance. So it did it like a couple of times, like a couple of times before it made its new high. After it made its new high in March, it hit it a couple of times. Did the same thing in April, mid and late April. And then until now, June, uh, it just kind of just rode this line, this resistance line. So when I first originally saw this, I said, okay, well, you're trading along your resistance line, first and foremost. And then two, you know, now that the moving averages are relatively close, like the 5 EMA and the 20 SMA, they're relatively close, right? So on Monday, when I was kind of watching this, and I said, okay, well, this is probably something I should get in on. Um, and then I did. I ended up buying some. But the biggest part about this is that when you're looking for a stock to get in and you're not 100% sure, look to see when did it make a new high, right? Once it makes a new high and you're looking to buy that stock, don't buy it. Wait for that high to be created and then wait for the price to pull back, because that price will always pull back to the 200 SMA price, always. There's not a time where a stock has made a new high and hasn't pulled back to, if it doesn't pull back to the 200 SMA price on that trading day, best believe the very next day is coming back below the 200 SMA price. It's going to do that, and you'll see this time and time again. So when we're looking at the Wyckoff method and we're looking at what phase we're in, this still kind of looks like it's in phase one, whereas this trading sideways, both moving averages are relatively close to each other. And that helps limit your downside risk. Because when you have both moving averages so close to each other and you're trying to figure out what your downside risk is, you always know that, hey, if the stock is trading below the 5 EMA, it's going to go to the 20 SMA. And if you know what the 20 SMA price is, from the difference between that and the 5 EMA price, then it's going to be easier to say, okay, downside risk is here. Downside risk is 50 cents away from the 5 EMA, or it's 20 cents or whatever it is, right? And the stock price is trading, and the stock price is probably trading maybe $1 above the 5 EMA, like here. Like on Friday, it closed. Snap closed at $67.67. The 5 EMA price is at $66.04. So I know that there is $1.63 of downside, right, to the 5 EMA price. That part I know. I don't want it trading below the 5 EMA price at this point, expecting it to go up higher. I want it to close. I want it to trade and close above the 5 EMA price. That's what it did on Friday. So we know that there's $1.60 worth of downside, right? But when we look at the upside, we see that the upside has over $2 of upside, whereas at 69.90. The reason why I say 69.90, because its next resistance area is right around here, 69.90. We could say that this cross, this right candlestick that happened on Thursday is the next resistance, and the next resistance will be at 69.23. But still, even with that, that's almost $2 of upside. Not almost, right? Because it's 69.23. And 69.23 minus 67.67, that's roughly $1.40, right? So we can come to an conclusion that this is almost a 1-to-1 ratio, right? So my upside and my downside are practically equal. It's just a matter of which one is going to come first. And being that the social sentiment around um, social media is going to cause stocks to go up higher, like Facebook, Twitter. Those stocks have gone up higher and have been rumored to be, to be on the Wall Street Bets chat box. So, maybe, Snap will get some type of sympathy to move with it and stuff like that. But right now, I cannot say that my re-entry was the best re-entry, just because of the fact that one, when I rebought in, which was on Friday, the stock on Thursday just made a new high. So when I rebought on Friday, it was at 3:45 p.m. when I rebought it. So it was going towards a close. I was buying like right around here. It was starting to come back up, right? It was starting to come back up. Actually, I bought it like right around here. That's at 3:45 or so. So now it was starting to pull back. So when it was starting to pull back, after finally having both moving averages above the 200 SMA price, uh, it started to pull back and then went to the close this way. Typically, when this happens, the very next day, which will be Monday trading day, it will go higher and try to retest its previous high. Now, the previous high, now, mind you, like we said, anytime a stock makes a new high and pulls back, it has to trade below the 200 SMA price. But what will happen after that is that once it comes back over the 200 SMA, it's going to try to test its previous high. Um, 55 right here. This is another high as well. See, when the market opened, what happened? It went up and then came down. When it went up, it was slightly overbought, but it pulled all the way back down. Why? Because the previous high was back here on Thursday. It traded below the 200 SMA, but moving averages try to come on over the 200 SMA price. At that time, it was overbought. This is the other caveat, recognizing. Huh, well, that just kicked me off. I was kicked off some way somehow. But essentially, at the end of the day, you want to see that the stock, once it made its new high, trade below the 200 SMA price so that you can buy below the 200 SMA and then ride the wave up when it finally comes above the 200 SMA price. So right now I'm down probably like $10 on the position that I reopened on Snapchat on Friday before the close. But this is something that on the long-term chart, it shows that both 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 moving averages are one above the 200 SMA price. Two, on Friday, the stock closed and traded above the 5 EMA price. Three, it's not overbought on the RSI. And then four, we see that the TTM squeeze is starting to give these histograms that are teal. So once this start to happen, then we could potentially have more upside coming. So this is why I didn't sell it. I do see that there is resistance at this 68 area, 68 going into 69. But you know, I will be waiting for that 69 to be hit as my target price to get out. Mainly just because of the fact that I don't want to hold this longer than necessary. But I do want it to be overbought so I can sell it. And when it's overbought, then there's nothing to really worry about because now that you're just looking to sell. When it's overbought, that's your opportunity to sell it so you can make your profit. All right. So that's Snapchat. Does anybody have any questions about Snapchat? I can show you my notes once again so you'll have an idea of what I'm referring to. Go back. All right. So this is like I said with Snapchat, essentially the first time I bought it, it was holding above $63, which was the resistance that we talked about. I ended up buying the contract, the 70, the contract, the $70 contract, and I bought it. I bought the 90. I bought 98-cent contracts, right? On this same day, right? And so this was all June 21st. So I held it for 2 days. So I held it after June 22nd, held it on June 23rd. Then I sold it at 10:17. So at least you'll have an idea of like, okay, what did he do now? So I sold it at 10:17 because it made a new intraday high. And the intraday high was at 65.47 a share. So so that's typically very helpful. That part is very, very helpful when it comes to recognizing, okay, this stock went higher or not, or did this stock created a new low, and if it created a new low, should I be in it? So if no one has any questions about space, I'll probably go on to just a couple more. I was looking at SU and W. I'm holding a position in this one because this is phase one of the Wyckoff method. And this is all phase one right here. We just have all accumulation, right? After the stock came down from its high and came down and tested the 200 SMA price, which it did, right? From here, this is what, the 29, almost $30. It came all the way down to $10 right here. You can see that all it is just trading sideways, phase one. This is phase four, this is phase one. So the last time that it went through phase one, this is what happened. Like this is phase one, this is phase two, right? All of this is phase two. Now we can dispute if this is phase three or not, right? Even though it came all the way down, this is phase four, right? And then came back up, trying to retest. It couldn't really retest. Just hit this resistance before pulling back down to support. And this is that support area around $12. This came down to 12. So now on this past week, it's been trying to retest this whole $12 area. I think it went on Friday close to 11. So remember, I was mentioning intraday highs and how intraday highs, once the stock goes high, it has to pull back, right? So it did pull back. The stock made an intraday high in the past 5 days, and it came back to the 200 SMA price. The biggest thing here is not being suckered into a stock that will show you that it wants to trade below the 200 SMA price, but it doesn't do it convincingly. So here it kind of does it, right? where it kind of trades below the 200 SMA price before the straddling the 200 SMA price with the other two moving averages. So that's the green and the teal line, right? So it trades along with those. And then after it trades along, it trades sideways, I should say. Um, you know, on Monday, I would expect it to come back. Already, I bought some contracts in this. I still see some relative type of back, maybe 1060. The reason why I say 1060 is because yeah, that price was hit here, but it was also hit like right around here, right? Because this was the previous high. That previous high was created. Then what happened? The stock pulled back below the 200 SMA price and traded below the 200 SMA price all day, right? Until it traded above the 200 SMA price, which it made a new high, right? Because this high was broken right here, made a new high. And as you can tell, it pulled back. And what did it do? Pull back to the 200 SMA price before going up higher and creating a new high. So this went up a whole another $1.15 when it created this whole new high. So this is pretty amazing right here, right? Because you're seeing an example yourself of when a stock makes a new high, what can happen right after. You know, once it makes that new high, it's coming back to the 200 SMA price. So you have one example. This was another example, which is 2. And then you have another example, which is just 3. 3 different examples of a stock making a high and then pulling back to the 200 SMA price before going up higher. Right. So this is practically like what you'll see all the time, particularly dealing with the Wyckoff method. Wyckoff method is giving us all the phases here. Right. Even if, okay, so yeah, went up here, that's 2. After this is 1, well, this is 1, 1, 1, 2, kind of levels off 3, comes down 4. Levels off here at 1, makes an exponential run here for 2, levels off here at 3, levels off. This is all leveling off here, right? Just kind of trading sideways between 130 and 140, 145. And then after this 3, comes down to 4, back to 1. So this will be at 1 right now going into Monday. And when Monday comes, maybe it might trade below the 200 SMA price for the whole day. Or 2, it will start trading above the 200 SMA price because we know that the infrastructure deal has also added, right, electric vehicles. So, and because Sunworks deals with this electric vehicle component in their company, I can see that this stock will continue to have some substantial gains. So this is Sunworks, and this is how you, once again, you see the Wyckoff method here. All right, we'll see the Wyckoff method. Once again, we'll show you here. You see how when it came down, it consolidated, right? So this is 4, this is phase 1, and this is phase 2. Right? This is what we're seeing here. And then this is phase 2, this is phase 3, and this is phase 4 when it comes down. Phase 3, consolidation. Phase 1 and 3 are consolidation. Phase 2 is going up. Phase 4 is coming down. Right? So these are things that are, you know, when you're looking at any chart, this gives you an idea, an opportunity to really hone in on what the stock looks like, what the price action looks like, and how to move forward when you do purchase the stock. So we can go into one more, and then I'll give it a rest on this one. Unless you have any questions. I know y'all come, but it's like y'all don't have any questions. Y'all just kind of sit there and listen to me. But the last one, and is that I'm not particularly in this one. Well, I was in this one, and I just kind of want to go over it right now. I was in this one, I earned on this one, but I still see that it has upside, which is Palantir. Palantir, just like space, right? Um, it needed contracts, and once it gets contracts behind it, it will go up higher. Palantir deals with computer software and defense security. Once you have that defense security, especially nowadays, it's going to make it a lot easier to deal with, because you know that the market wants software to protect their computers, to protect their hard drives or their cloud storage. And because the government has this Palantir as part of their, one of the companies that is serving their servers, we start to see here that this is really phase one. This is all phase one. After it made its all-time high of $45, yeah, it came all the way down phase four. Came from here all the way down. But once it came down to infinite, what was it, $18, it started to trade sideways, right? And once it traded sideways, this is all phase one, right? This is just like consolidation. And it consolidated, and it's been consolidating from the 18s to the 24s, well, $26. All right, so it's relatively $8 of consolidation that's been doing ever since the middle of May. And so here, once again, once you identify on the long-term chart where you are on the phase 1, 2, 3, or 4, you can start using the smaller time frame. I tend to go from the 4-hour time frame to the 1-hour time frame to the 2-minute time frame. So on the 4-hour time frame, we still see that the 200 SMA prices is below the stock price and the other two moving averages, which is good. The MACD is not crazy, overextended. The RSI is slightly overbought, but that's okay. And we still see some squeezing happening on the TTM. Now, if we go to the 1-hour time, we see that the stock price is trading above the 5 EMA, above the 20 SMA, and above the 200 SMA. The MACD is not overextended, and the RSI is not overbought. The TTM squeeze is showing that there is some consolidation. That's all selling pressure, but let's go on to the smaller time frame, which is the 2-minute time frame. Now, in 2-minute time frame, we see that the stock made a new high intraday. So because it made a new high intraday, what does it have to do? It has to trade below the 200 SMA price. If it trades below the 200 SMA price, then it becomes just a wait and see. Now, wait and see if support is held, and wait and see if the stock starts trading back above the 200 SMA price. Once it starts doing that, then it becomes a little bit easier to identify if you should get in on the stock or not. Now, after hours, it shows that the stock is overbought. So clearly, this is not something that you would want to buy in the after hours. It makes it a little bit more risky. But once the market starts to open back up on Monday and the RSI is no longer overbought, maybe at this time, you might see that both moving averages are above the 200 SMA price. Because once they're above the 200 SMA price, then it gives us a little bit more breathing room. We see that the SMA price, the 200 SMA price is about 11 cents above the support price at 26.62. So that in itself is a good downside risk to measure if you wanted to see, like, if you were to get in right here, and you can tell, like, hey, this stock was kind of fighting around the 60-cent area because it was starting to make this U-shaped pattern. Once it starts making this U-shape, then it makes it a lot easier to see if support is going to be held. And maybe there might have been previous support, right? There was previous support like right around here, right here, maybe even here and here. So like, 2660 is not too far-fetched of a supportive price, right? So now that we understand that, or at least see that, now it's identifying, should you buy this? If buying this is there's something up your alley because you feel like it hits all your criteria, and you read the news and you recognize that, okay, this does have some potential of some upside, then you can recognize that on the daily chart, it's above the 5 EMA price. Right, the 5 EMA price is $26.19. That means that at its stock price value at $26.78, there is roughly 59 cents of downside risk. So that means that if this stock, for some odd reason, does not break this resistance, you have 59 cents of downside before it will make a reversal and go in the opposite direction. So yes, it could still retest this 5 EMA price. It could. The likelihood of that happening is not happening. So the next thing that you want to see, now that we know that 59 cents is downside risk, we want to see, well, where could it potentially go to? Where is the upside reward? So the upside reward would be around 27.49. The reason why I say that is because its previous resistance is right back here, back in March 15th. Right? There is no other red candlestick that is fighting prior to this day. All the other red candlesticks, it's already been engulfed. It's engulfed this big candlestick and engulfed this downturn and engulfed these red candlesticks as well. So the next red candlestick that Palantir will have to confront, as far as confronting short sellers, is around this $27.49 area. So maybe that it will break it, or maybe it will test it. But we do know right now that we have at least 75 cents of upside. So 75 cents of upside versus 59 cents of downside, that's almost another 1-to-1 ratio. Right? And being that, hey, it just came off of this new high, it's going to be kind of hard to really figure out if this is going to be well worth it. So you want stocks that will give you a 2-to-1, 3-to-1 ratio, kind of like Blink, BLNK, or Snap. Where's Blink? You want stocks like Blink that can definitely give you some more upside from breaking the upper band right here, maybe even going to 50, 40, let's say 45, maybe going to 45 before the end of July, right, or before the middle of July. But whatever the case may be, we still see that it's in phase 1, and it looks like it wants to start entering phase 2. So Blink seems like a very reasonable stock to get in. Right, I've been mentioning this one, quite often, and I really do feel like this is another one. I've earned money off of this one as well, this past week. So I'm not gonna go in too long. Like I said, I am out of town, so I definitely wanted just to share a couple of these positions that I was in on. Like I did say, we'll go over Bed Bath & Beyond. Bed Bath & Beyond, like I said, they're coming up with earnings on Wednesday. Right, so on Wednesday, when they come out with these earnings, we see where they are on the chart. Right now, we see that they ended with a red candlestick on Friday, and it looks like it's coming close to support at this $27, $27.20 area. Right? Do I believe it will come down there? Nah, not necessarily, but I do believe that $28 could be tested or confronted at some point, just because that this red candlestick closed below the 5 EMA price. So, and this red candlestick means from Friday. So this red candlestick on Friday closed below the 5 EMA. The potential of it coming down to 27.21, is greatly enhanced. But like I said, do I believe it'll come all the way down? Not necessarily, just because it's one of those meme stocks. So, well, let's analyze this down on the 4-hour time frame. 4-hour time frame shows that the stock price and the moving averages are above the 200 SMA price. So once again, Even though it was showing some weakness on the daily, intraday is showing that there might be some strength happening, right? That it might bounce off the 20 and try to go higher because it tends to do that too, right? The stock price would come below the 5 EMA, test the 20 SMA, and then bounce off the 20 SMA to go higher. Now, the 1 hour time frame tells us a little different story. So now on the 1 hour time frame, we do see that there is that everything is below the 200 SMA price, meaning the moving averages, the stock price, everything below the 200 SMA price. So with that being said, the biggest thing that could happen here is that the stock price reacts by spiking towards this $30.70 area. So that's a upside of a $1.70, $1.67 of upside, right? So we can see that. We can see that because anytime a stock is trading below the 200 SMA price, the 200 SMA price often rejects it until the 5 EMA and the 20 SMA price comes above the 200 SMA price. And it can only do that with the stock price. The stock price is the one that's going to influence that price to go up higher. So because this can happen, where it can go up higher. Also know that on the reverse, the downside can also happen. So we'll have where, like I said, I don't believe this can go all the way down to 27, but I believe that it can test $28. And $28.15 is probably that contesting price, right? If it holds $28.15, then best believe there will be an opportunity for all the moving averages on the hour chart to coalesce and create some type of upside, particularly if there's news, if there's good news that will move the stock higher. That good news could be anything from a CEO saying that they are in favor of Wall Street bets or in favor of the retail investor. It could be any of those. Right? So after the stock made its new high on Thursday, right? Intraday new high. What did it do? It fell below, yes, it fell below the 200 SMA price, correct. Once it falls below the 200 SMA price, right, it has now an opportunity to go back above the 200 SMA price. So on Friday, it continued trading like that, below the 200 SMA price. Now, the next question is, do I believe it can go up higher? Do I believe it can go back above the 200 SMA price? We have to come back out to the daily chart for that. And when we come back out to the daily chart, we still see that, yes, it still has an opportunity with a small caveat. The small caveat says that this red candlestick has traded and closed below the 5 EMA price. If for some odd reason the stock does not trade and hold above $29.20 on the day, then the stock is going to go lower and then potentially even go lower into its earnings. Once again, earnings, it might pop and show that, hey, they had some insider buying, not insider selling. So they had some insider buying, then the stock will go up higher. But if I were to buy this stock, I would wait until Wednesday. I'll wait until Wednesday, see if $28.15 is held. First and foremost, if $28.15 is held, then that might be a good entry to buy in, and then hopefully, whatever good reporting, fundamental reporting that might be given, will cause the stock to go up higher. If not, and $28.15 is held and then starts to break down based on the fundamental analysis of the earnings report, then expect the price to at least start testing $27. Right. So with that being said, it is now 8 p.m. I'm about to start to wrap up. If you don't have any questions, I want to say once again, thank you all for coming back and coming to listen. Grace, thank you for coming. Donna, thank you. And Angie, thank you. Um, Hopefully this helps. These are like, I know we went over a good 6 stocks like in a span of 1 hour, but those 6 stocks will definitely give you a visual of how a stock will move, and different rules that you should put into play when you're looking to buy. Like if a stock made a new intraday high on the 2-minute time frame, if a stock is overbought, if it's overbought, what is it going to do? It'll more than likely come back to the 200 SMA price. If it's overbought and made a new high on the same day, then it's definitely coming back to the 200 SMA price. Is there any news that help complement the stock? Um, is there good enough volume? And where is it in relation to the Wyckoff method? Is it in phase 1, phase 2, phase 3, or phase 4? Once you have those basic knowledge or objectives down in your mind, then each play becomes easier and easier, and you get more calmer when you're focused on it. And you're not just looking to throw money at the market to make money, but you're looking at the market as a way to advance and to expand your money. So once again, thank you so much. I greatly appreciate you. It's 8:02. You don't have any questions, we can start ending the chat now. But if you do, please feel free to ask away.